Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 22nd of May. I'm Daniel Lam, your host for the podcast. This week, we've been focusing upon our thoughts on U.S. assets and U.S. equities in particular. How about Chinese equities? The Hang Seng Index has been recovering strongly as well. Where do we stand right now? Well, long-term listeners to this podcast would remember my favorite indicator whenever we've had a period of strong momentum in an underlying asset. I always compare the asset price versus the relative strength indicator, i.e. the RSI. Now, the RSI has almost always been misinterpreted and overly simplified by many sources. Well, typically, these sources would cite that anything above 70 means the asset is overbought, and below 30 means the asset is oversold. No. The RSI measures the strength of the moves in the underlying asset. Now, by itself, it does not indicate a change in the direction in the underlying asset. You need to look at the change in level in the RSI plus what the price chart of the underlying asset is telling you. In this case, the Hang Seng Index RSI hit the peak at the start of May, and despite the Hang Seng Index reaching its highest level yesterday since the Liberation Day, the RSI was actually lower than what it was at the start of May. So we call this divergence, meaning that the index rise is not being supported by equal or increasing strength. This, combined with the fact that the Hang Seng Index was retreating after reaching its intraday high yesterday, means that technically we're primed for a pullback. And this does make sense from the perspective that the market has almost priced in the good news of the US-China temporary ceasefire on trade, and the Chinese technology companies' earnings have been positive, but the heavyweights are mostly over. Technically, it is very plausible that the Hang Seng Index can pull back to the important support at 22,640. But we do see such pullbacks as a good buying opportunity, especially for the Hang Seng Technology Index. Variations remain at a deep discount to their US counterparts. We've also witnessed the early positives from the government's fiscal support for technological transformations. The government's ongoing trading program is bolstering electronic sales, and this is another underlying positive for the long term. That is all from me for today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.